And welcome back. Something big is about to happen to our US housing market as mortgage rates have been above 7% for over 1 month. To start this year, rates were at 3.3%. So rates have been increasing big time so far this year. And on top of that, housing inventory is more than 40% higher right now compared to the same time period last year. So because of this, there's some big changes ahead in our housing market, and I'll share those here in today's video. I'm also going to be sharing the latest trends we're seeing right now regarding home prices, housing inventory, price reductions, and of course, much more. So stay tuned for that. And of course, before we get started, if you guys haven't subscribed just yet, I post frequent housing market updates so you guys can be more informed. So I invite you to the family if you haven't subscribed just yet. And let's go ahead and dive right in. I have so much to share in today's video. So here's the latest trends we have from Realtor.com. They report a weekly summary regarding what we're seeing right now in our housing market on a weekly basis compared to previous years. But just like my previous videos, I actually did not even read their analysis. I prefer my own analysis to see what's going on. I'll share my unbiased view about the latest trends we're seeing right now. So instead of going through this analysis right here from Realtor.com, go to Realtor.com/research/data. It takes you to this website right here, and scroll down and click on this link right here, which more or less takes you to this Excel file right here. And don't be scared. I'll share a high overview about what we're seeing right now in our housing market. And so this is going to be really interesting trends I'm sharing today because last week there's some very big changes here. And by the way, again, I have a cold, so apologize for my nasally voice. Hope you guys can look past that or hear past that. Anyways, I'm such a nerd. So November 5th, take a look at this. And by the way, I'm going to be sharing trends regarding home prices, housing inventory, new listings, days in the market, as well as price reductions. And by the way, this is my second time filming this video. I made this video already, but actually didn't hit record. So anyways, hopefully it works this time. So the median listing price in the US right now is up by 11.7% from the same time period in 2021. And this is actually the second consecutive week of a slight decrease in asking prices in the US. And as I note right here, there's very little movement in asking prices across the United States for 7 consecutive weeks now. This is due to a seasonal slowdown. It's entirely normal to see home price gains to slow in November and December each year. So we're seeing a seasonal slowdown right now in home price growth, but also rates have been more or less above 7% since the beginning of October, and this should slow year-over-year price gains in the weeks and months ahead. And by the way, I should have mentioned this, but I'm going to be sharing how this week, which again is November 5th, compares to the past several years, going back to 2017, so you can see how this week compares to previous years. So let's now talk about housing inventory. So housing inventory increased by 42.3% compared to the same time period in 2021. So a big increase by 42.3%, and so much so, this is the biggest yearly gain so far this year. Again, up by 42.3% on a year-over-year basis. Again, the biggest increase we've been seeing so far this year. And to me, the big significance regarding this increase, again, the biggest increase we've been seeing so far this year is despite the fact that new listings have been decreasing big time. And I'll share more about that here in just a little bit. But look at this, because for the past 8 weeks in a row, active listing inventory or housing supply has actually been increasing. And again, this is a pretty eye-opening given the fact that new listings have been decreasing. So let me share that with you right now, because new listings have been decreasing by double digits for the past 6 weeks in a row. And on top of that, we've been seeing fewer new listings hitting the market compared to the same time period in 2021 for 18 consecutive weeks. So despite the fact we've been seeing fewer new listings hitting the market for quite some time, active listing inventory or housing supply has been increasing for 8 consecutive weeks. Therefore, this increase of housing supply is due to the fact that home buying demand is decreasing. So it's taking longer for houses to sell, and we're also seeing fewer contracts being signed between home buyers and home sellers. So to me, this is pretty eye-opening that we're seeing fewer new listings hitting the market, but despite that, we're seeing this huge increase of housing supply, again up by 42.3%, which by the way is on par with what AltosResearch.com is reporting they're reporting a gain of 43% by my math, because for the week ended November 5th of last year, there was just over 400,000 houses for sale. And for November 4th of this year, there was approximately 575,000 houses for sale. And by my dumb math, that's a 43% increase on a year-over-year basis for housing inventory. So one more thing I want to mention regarding housing inventory is this, because the changes we've been seeing over the past 8 weeks right now is much, much different compared to the start of this year. Because from January 1st until really the middle of March, we saw decreases of housing supply in the range of 20% to 30%. So we saw in the range of 20% to 30% less houses for sale compared to the same time period in 2021. Now it's up over 40% right now. Another thing I want to mention regarding new listings is this right here, because new listings, again, down by 19.7% from 1 year ago. By my analysis right now, this is the biggest year-over-year decline in new listings since January 8th, which you can see right here. Again, down by 19.7%. The biggest decrease since January 8th, when new listings decreased by 20%. And on top of this, new listings down by 19.7% is on par with what Redfin's reporting as well, because the new listings, according to Redfin, for the 4 weeks ended November 6th, is down by 17.5%. There was approximately 73,000 houses listed for sale during this time frame, but it's actually less than the past several years, fewer than 2019 and also 2021, and of course 2020 as well. So my personal biggest takeaway regarding the relationship between new listings and housing inventory is that new listings have been declining on a year-over-year basis for 18 consecutive weeks. And despite this, we've been seeing this increase of housing inventory. Again, the most recent trends we're seeing right now is that housing inventory has been increasing for 8 consecutive weeks. Let's also talk about days in the market, because right now it's taken about 7 days longer to sell a house compared to the same time period in 2021. And again, this is a lagging indicator though, because anytime we're talking about days in the market, these are for houses that actually have sold. So houses that actually have, or sales that actually have been finalized. So this is a lagging indicator though. But despite this, it's taking longer for houses to sell compared to 2021 for 15 consecutive weeks. And because it's taking longer for houses to sell for 15 consecutive weeks, that's one reason why housing inventory has been increasing. And by the way, last week, it's taking 7 days longer to sell a house, which is on par with what Redfin's reporting as well, because days in the market, according to Redfin, is right here, which is about 35 days is the median days in the market, taking approximately 8 days longer to sell a house compared to 2021, when during this time frame, which is more or less right here, it was taking approximately 27 days to sell a house. So that's days in the market. Let's talk about the number of reduced price listings in the US compared to 1 year ago, because have a look at this. There's a big increase of 104.5% in the number of reduced price listings compared to the same time period 1 year ago. 104.5%. This is actually the second biggest year-over-year increase so far this year. So 104.5%. The biggest increase we've been seeing since June 18th, when at that time we had a 110% increase in the number of reduced price listings from 1 year ago. And also this number here has increased in 4 out of the last 5 weeks now. We've been seeing an increase in the number of reduced price listings across the United States. Also, according to altosresearch.com, the share of reduced price listings for the week ended November 4th of this year was 43%. Back in May, it was approximately 21%. One thing that's very important to note here is that even though the share has more or less doubled in the past, 6 months, the share has actually been increasing, but not as much compared to before August. So the share of reduced price listings has only increased 3 percentage points in the last 2 months. So 2 months ago, the share was approximately 40%. Now it's at 43%. So it's still increasing though, but the pace has slowed since August of this year. And because the share of reduced price listings has been more or less slowing over the past couple of months here, we could be seeing more home sellers pricing their houses more appropriately given the fact that our housing market has been slowing down. In other words, we may be seeing fewer overzealous home sellers, which is causing the growth rate of price reductions to not increase like it once did before August. All right, let's change gears and talk about how this week compares to the past several years. So going back to 2017. I wish I could show you data regarding our housing market back in 2016 and before that, but actually Realtor.com only provides data on a weekly basis going back to July of 2017. So in any case, let's have a look at what we're seeing right now and how that compares to 2021 going back to 2017. So again, asking prices are up by 11.7% this week, but this is much different compared to 2019, 2018, and also 2017. Where asking prices were not increasing as much. So this right here is obviously pre-COVID, seeing gains in the range of 3 to 8%, which is obviously much lower than gains we're seeing right now. And the reason why we're seeing the number of reduced price listings increasing so much is because asking prices are still very high. And of course, housing demand has been decreasing greatly. Also have a look at this because housing supply again is up by 42.3% on a year-over-year basis. But look at this over the past couple of years, because back in 2021, there was 24% fewer houses for sale in 2021. In 2020, it was down by 40%. So housing supply was absolutely depleted over the past couple of years. And this year, we're seeing just the opposite. Here's something we're also seeing that's just the opposite right now compared to 2021 and 2020, because back in 2021, it was taking 11 days faster to sell a house on a year-over-year basis. And also in 2020, it was taking 14 days faster to sell a house compared to 2019. And again, right now, it's taking 7 days longer to sell a house compared to 2021. And of course, the number of reduced price listings is up by 104.5%, which of course is much different compared to the past few years where we saw decreases on a year-over-year basis. All right, so that's a comparison compared to the past few years. But I also want to provide a summary in today's video because that was a lot of information, right? So number one, inventory has been rising for the past 8 weeks in a row and rose by 42% last week compared to last year. And this growth is significant given the fact that there's been fewer new listings compared to last year for 18 consecutive weeks. And on top of that, new listings have been decreasing by double digits for the past 6 weeks in a row. However, though, like I mentioned, our housing market would look a lot worse if new listings were absolutely skyrocketing, but in fact, they are not. And number two, mortgage rates have been more or less above 6.6% every day since October 1st. This should slow down home buying demand further, causing inventory to rise as well. It's also very important to note that mortgage rates fell big time last week after the latest CPI report or their inflation report was released last week as well. So that latest CPI report came in with inflation lower than expectations. And that caused rates to decrease by about 60 basis points in one single day, which is absolutely insane. Even with this huge one-day decrease in rates though, rates are still over 3 percentage points higher than 12 months ago. And number three, there was a huge increase in the number of reduced price listings over the past months. Also, the share of price reductions has more or less doubled from 6 months ago. Also, of course, far higher compared to the past few years. But the growth rate in the share of reduced price listings has been slowing since August. And number four, houses are taking longer to sell compared to the same week 1 year ago for 15 consecutive weeks. Again, though, this is a lagging indicator based on houses that actually have sold. I also expect this to increase in the months ahead due to our seasonality of our housing market, but also due to this spike in rates as well. So let's talk about some changes ahead, given the fact that rates have been at or above 6% since September 1st of this year. Number one, more buyers are going to get priced out of this housing market, or they're just going to opt to wait it out. And because rates have increased approximately 3.4 percentage points compared to 12 months ago, this is causing a 34% decrease in buyers' purchasing power, which of course is decreasing home buying demand, of course, right? And number two, there's still an affordability issue in the US right now. To buy a median price home today versus 1 year ago, that's going to cost a home buyer approximately $750 more per month in their average monthly housing payment, which is a 60% increase compared to a year ago. And number three, there's likely more declines in home sales as well as home prices for the remainder of the year. And this could be significant given the rapid rise in rates over the past 3 months. However, though, rates are going to be the big wild card though, because if rates continue to decrease like we saw last week, this is going to cause our housing market to change greatly in the weeks ahead. And of course, I'll definitely keep you posted regarding that. But I will say that because inflation is still very, very high, the Fed still has to raise rates in order to combat inflation, which should cause upward pressure in mortgage rates in the long term. And that's in line with what I say right here. To combat inflation, the Fed will raise rates until inflation is in line with long-term averages. Long-term averages is about 2% and not 7% plus that we're seeing right now for inflation. And when the Fed increases the federal funds rate, that of course increases interest rates for HELOCs, credit cards, and new auto loans, but also increases rates for savings accounts as well. And in my opinion, we probably won't see much long-term relief for mortgage rates until inflation is close to historical averages. And number 5, we won't see the true effects regarding rates at or above 7% until we see November and December stats. And I'll definitely keep you posted with latest developments regarding that. And number 6, subscribing is for free. And these videos take me hours to make, especially when I have to make it twice in one day. Anyways, I appreciate you guys watching this video. I definitely appreciate you guys supporting my channel. I really enjoy making these videos for you guys, even though they take me hours to make. And with that said, please comment below with your biggest takeaways from today's video. Also, if you guys got any value of this video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day and look forward to seeing you on the next video.